Why would somebody use an IUL, a VUL, or cash value life insurance? So I'm going to share with you the 3 different types, and I'm going to share with you the one that I use and why I use it. On this channel, we only share with you exactly what we're doing. It's very important that you meet with a professional to make an informed decision. Everybody's needs are different. That's why we created our own insurance company, because we found in the insurance industry, everybody was doing a one-size-fits-all, that everybody needs this type of policy. But everybody's needs are uniquely different. Index Universal Life works very well for me, and we're actually using it as it should be used, and we're building wealth with them, okay? So the first thing that I want to share with you is what are the 3 different types. So you have fixed, which would be something like a whole life. An example is when we say fixed, we're talking about interest rate. So maybe off a whole life, you're getting anywhere from 3% to 4%. So this is for someone who doesn't want any volatility, they want steady growth, and they just want a safe investment where they can get 3 to 4% on their return, okay? Then you have index, which is IUL, my absolute favorite, okay? I use it, my kids have them, I have them, I have multiple policies. My partner and I combined have 11 policies, and we use IUL. We practice what we preach, okay? This is indexed to the market, okay? So this is indexed. It's not in the market. It has a floor and it has a cap, okay? Then you have variable, VUL, okay? That is actually attached to the market. So someone has to be licensed to actually sell that Series 6, Series 7. They have to be securities licensed to sell you this product. Someone has to be life insurance licensed to sell you these 2 products, okay? We focus on Index Universal Life for our family and what we do. So those are the 3 different types. Now, what is the difference here? This is volatile. This is in the market, going up and down with the market. Okay, this has the principal protected and it has a cap, and this is a steady return. Now they all have different functionalities. I like Index Universal Life for a couple different reasons. Is number 1, when I pass, my cash value and the death benefit goes to my family. I love the fact that I have protection on my money and the fact that I can get market-like returns. Now the caveat is when the market's way down, okay, my principal is guaranteed, but I may not get any returns on this during that time. But the difference is where a lot of people aren't using them like we use them is that we actually leverage our policies to create cash flow, richest man in Babylon. I think that's where a lot of people come into these and they don't really understand how to properly use these. They don't know how to properly structure them, properly fund them, and we actually practice what we preach and we leverage them. So for example, my partner and I used our IUL to buy cash generating dividends, which will pay back the Index Universal Life at 5%, right? Then we have a large cash flow from our cash generating dividend that we can buy deflationary assets that profit, and then we can buy real estate, okay? So those are 3 different types. You have in the market, index mirroring the market with a cap and a floor, and then you have steady growth of 3 to 4%. So this would be a whole life, Index Universal Life, and VUL, okay? Now, the important thing is really sitting with somebody and looking at your overall picture around a financial strategy, a retirement strategy, and asking yourself which one works best for you. The key is to really understand. These need to be structured properly. You need to understand how to fund them properly, okay? I always say there's a lot of people driving Lamborghinis with regular gas in them, okay? These are very, very powerful tools if they're used properly. Cash value life insurance is a tool that the wealthy has been using for a very, very long time. Look up the tax code 7702A, okay? Look up that tax code. Okay, that's not what type of insurance policy, or that's a tax code where they allow us to borrow against our policies tax-free. Okay, that's the key. We want tax-free leverage. So we're really big on leverage in our academy, leveraging responsibly. I leverage for my Bitcoin to buy my insurance firm, okay, at 14%. I bought the firm, it's paying it back within a year, and I beat the hurdle rate by 32%, making money on my leverage. And we do the same thing with our Index Universal Life. For example, my partner took a loan from her cash value at 5%, buying a cash generated dividend. That dividend's produced about 100% on her money, paying back the loan, and then the rest, because we're making a large amount on it, it goes back into deflationary assets that profit, and then we buy real estate for tax liabilities, which depreciation. So these are 3 examples. I think the most important thing is understanding how these work and understanding how it can help your family. I believe cash value life insurance is one of the greatest ways to wealth. There's supercharged savings, and it's a great way to pass wealth down to your family tax-free. So this is 3 different policies. That's an example of how we use them, and we only practice what we preach. Warriors, rise, get your shit together.